The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, as we take a look at the market trade after Thursday's session, corn firm with more sales to China. Beans were mixed. We saw a good strength of bean oil with a bit of a recovery in crude. The stock market recovering a little bit, wheat down, cattle had a good day. Really just plenty of things to take a look at here. Joining us today, our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing, is with us. And Bryan, good to have you on and glad to see you made it back from Orlando. And, March Madness starting up on Thursday, getting some fun games in basketball. Looking at the markets, not a whole lot of activity, but some things to really take a look at. So.
Kind of boring times, right? So we had some really interesting, markets. The interesting one is, and really swimming upstream against everything else. Prior to the corn market, we had some announced export sales again today to China, and there's rumors of 80 million bushels, and this is about what they've done now. 3 different announcements, and it should be right in that 80 million bushel mark. So now we'll see what happens from there. The world, though, doesn't have much corn availability other than the U.S., so it's probable we could see some export activity start to pick up and get on a better, let's say, track to meet the USDA projections. But boy, some other wild markets. Crude oil just crashing the last couple of sessions and trying to make a half-hearted attempt at a turnaround today. Maybe can do so, but not up a lot as I look at it right now. And then over in the hog market, that's just collapsed, and I cannot get my hands wrapped around how hogs move $9 in 3 days in a market that's getting news about increased African swine fever in China. To me, the logical thing is, maybe our export market picks up. I'd like to maybe own some low-priced hogs, and it's been a real struggle here lately. Cash index just never has moved up and performed. So anyway, I'm rambling. What's on your mind, sir?
Well, I was going to say, to your point there in hogs, I'll stay with that real quick. It felt like yesterday was kind of maybe the pork and bean trade with beans under pressure. But to your point, African swine fever concerns in China, yet this market just collapsing, and it's hard to make sense of it if you're a hog producer, Bryan.
It is, and then we need to kind of give it a little time here, because it wouldn't be the first time we've seen the hog market make one of these kind of V bottoms, where I think there have been a lot of people who thought that cattle got high enough, let's buy hog futures. We expect pork prices to increase. We've talked about this before. It seems to be priced at a good level in the supermarket to generate consumer consumption, and yet it's just not moving. It's a strange anomaly that I haven't got my hands wrapped around, and that's usually if you kind of search far enough and hard enough, you find things. I'm struggling with this one.
Yeah, I'm with you there too. It's something I think we'll have to see how this market looks here heading to the weekend. In the case of cattle, I'll just stay on the livestock train real quick. Cattle had a really solid day. I wonder. I know we're still, catching up on CFTC data. Thoughts are, funds could have gotten some positions put on in this cattle market, but I wonder cattle maybe, quote unquote, squaring up ahead of Friday afternoon's cattle on fever poll.
Right. And I've had a long-term uptrend drawn on my chart, and it kind of basically went down to that. So I would still view this as a correction in an uptrending market. However, to leave a gap 4 days ago and not come up to that, right away is kind of concerning. I wonder if cattle, pork, some of these other markets, the crude oil, really aren't seeing the traders, that is maybe the big funds, pulling out of things. And this whole banking issue is, I don't know how we want to read that. I'm going to speculate, but when I see supposedly one bank fail, that's in a volatile environment of high tech and a lot of investment, I can maybe understand that. When you start hearing about another one and one in Europe, and for me, the sort of the rush to shore this up by the administration and provide liquidity, it makes me wonder if there isn't a whole lot more, and these are just the tips of the icebergs, or tip of the iceberg that is maybe concerning the financial community. Stock market wasted no time worrying about that as well.
Mm-hmm. Well, let's shift over to corn because your thoughts on the financial side, I think this will segue us well to corn. It feels like, 3 days in a row, these big sales to China, one would think, okay, hey, this is going to give us some good strength in corn. It felt like it did give us strength, but it almost felt like it kept us from falling apart under the headwinds from the outside markets. That's been my bias here this week. What do you think about that, Bryan?
I think you're probably onto something. The bean market looks a little tired on the old crop, so corn didn't get any help there, right? New crop beans look really tired. They pushed to their lowest level since August. So the corn market has had fundamental news that's been long awaited. It's good. I think farmers selling pretty much slowed up as well. I know I talked to a lot of farmers, and I think they were more aggressive earlier in the December through February window,
Mm-hmm.
and I think that's now changed. And the corn's got some news. It also has this. You're starting to look on the map, and a month ago, you and I were talking about the drought monitor index, and El Nino should be coming, and we'll see that shit. Well, boy, it's shifted over. There's a lot of snowpack now. I don't think you can draw any conclusions, but I had a farmer today in North Dakota said he thinks he's going to take prevent. That's how much they're buried right now. Minnesota farmer told us that if it would stop today and clear up and dry, they'd probably get back to their normal planting pace, but that's the end of April. But he said right now it just looks today like we might be behind that. So again, you're getting some fundamental things when you look at, in theory, Brazil basically tapped out of corn. So we see the exports pick up, start to see maybe some weather. 30 to 40% of the Brazilian crop planted in less than an ideal time window. It doesn't take a lot of math to say, hey, maybe this USD outlook form yield and acreage number are already at their peak.
That's something to think about. And obviously, a bull market got to keep feeding the bull here. I wonder with corn if some of this export news, these big sales starts to, slow down a little bit, even though the US is pretty much the only game in town. It just makes me wonder and think about, if I'm a farmer, do I got to get some protection underneath me here if I haven't done so already in this corn market, Bryan?
Well, I think there's two different things we're talking about here. One is, what if scenarios and the potentials. The reality is everything is relative. So the corn market historically has been a pretty tight margin business. It usually doesn't offer big return on investments. And when it does, they don't last that long. So it's a tight margin business. So when I say relative, so today, December corn closed at 558 and a half. Now, if you didn't know anything and I said, hey, corn's at 558 and a half, you may go, okay, that's not so bad. It's close to my break even, or maybe I'm a little under. It's mid-March. Maybe I ought to start, getting defensive because maybe 458's in the cards. It's where the market's coming from. So when you're trading near $6 or $6.25, 558's not good enough. But given the timetable that you're dealing with, being somewhat defensive or coming up with defensive posturing and strategies may make some sense. I like defensive posturing through, in this case, puts to leave your top side open and unpriced corn. I like the idea of maybe even fence strategies where you buy, put, sell, a call. That is a very risk position. But if you have your entire crop unpriced, the only way it becomes a risk position is that your unpriced crop has to gain value. So talk to your advisor about those things. Don't just take my word for it. Make sure you understand it.
Well, and I wonder too, there's so many factors at play here. Another one I'll throw at you is the Ukraine grain deal. We're waiting on an extension. It expires Sunday. Russia wants 60 days. Ukraine wants 120. Seems like we're kind of at a stalemate with that. And obviously, we got to keep that corridor open, considering we have tight supplies of corn. We're getting wheat out of there and more. So I think that's another situation that's going to be a key here the next couple of days to watch.
I'm just guessing that the market guess or bet is that the corridor stays open, whether it's 60 or 120 is semantics, but every day it stays open is one day more that grain can reach the world. And that's why I think wheat softened up a little bit here. I today at least, I think you've got Russian wheat that's priced lower than pretty much anywhere in the world. So if you believe the flow of grain continues, that's going to be just tough to get markets to move in general. We still can't connect enough dots to feed the bull, as you said, to say that hey, the markets are turning around. There's a lot of odd stuff going on. Again, now it's banking. I don't know if there's confidence in money flow in, or if the trade is expecting that money will stay on the sidelines and earn 4.5% in the CD.
We're having a conversation today with Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, you mentioned in the soy complex, we hit new lows in beans there. This market looking tired. Bean oil recovered a bit Thursday thanks to crude oil recovering or attempting to recover on Thursday. But overall, you look at this soy complex, we're seeing those exports shift more to South America and just seeing them slow down for the U.S., talking about or looking at this entire complex, I'm with you. It feels like it's tired. What else are you seeing on these charts that makes you lean that way right now, Bryan?
Well, what you're seeing is a failure to the market to sustain itself when prices do rally. So we'll see if Maycorn's percolated here, but it's only percolated to less than where it was. But we saw that all late fall. Early winter, where I use that term slippery slope on corn, where we continue to see rallies, but then no follow through, and they would drop off. So it's more of a sideways to lower pattern. I don't think we've changed things fundamentally to argue that we're out of that or that we're going to see a lot of money come blowing into this. It looked like the fund money, as the CFTC catches up on the releases of the reports showing who's in the marketplace, will show that they really blew out of corn hard. Mm-hmm. That's a more of a money flow thing, a margin thing. So the good news is that leaves the market very vulnerable to money to come flowing right back in, because prices are lower. And if there's any perceptive issues with Brazil, I think that's the big thing to watch over the next 60 days. Then we'll see that move. But otherwise, traders have been rewarded by selling rallies and being patient and waiting for the market to dip. And it's been a kind of what I'm going to call a bear trader's market.
With soybeans as well, thinking about the Argentine problems, it feels like maybe the trade has digested a lot of that and says, okay, we know that Argentina is not going to have a great crop, but they'll probably get some beans from Brazil to crush. And it seems like that's kind of become old news here in this trade, in this soybean trade, Bryan.
It has. The expectation is that the increase in Brazilian beans this year make up for the loss in Argentina. So you're kind of a net zero compared to last year, or even a little bit higher than last year. What you don't have is the 1-2 punch of Argentina and Brazil. And that's why I think beans have held up very well. But to your point, export sales last week were negative. It's tough to get the market really moving in a direction that does anything but kind of suggest that traders, as soon as they feel the momentum on a correction or recovery is upward, then they're pretty much moving out. And that's discouraging. Now, soybean sales stay at 24.4 million, kind of encouraging. So I don't know if the story is fully written yet. I guess if you take last week and this week and put them together, it's still a nice total. 1.812.7 is the total. So just a little over 1.8 billion. Still looks like we're on track, maybe easily to hit the USDA projection, unless we see cancellations.
Well, Bryan, before we wrap up, how about that dairy market? Give us an update there as we look to the end of the week. What are you seeing?
Yeah, jumpy, volatile market. Saw some real bump in cash cheese prices that bled into very strong gains in the front month futures, not the back months. front month futures a couple of days ago, and we've kind of leveled off since then. So we're still in this big downtrend. Had kind of a one-day wonder, and haven't done anything with it since. But it does look like the front months are, reflecting more demand as prices move lower. Demand's sort of a lagger, and all of a sudden it kind of caught up. And what I mean by that is you were trading under 1750 in the April contract. Right now you're over 1850. So a nice pickup of a solid dollar. Hit a level today that we haven't seen since the first week of January. So nice recovery there. Back months, though, continue to stay somewhat concerningly uneventful. Mm-hmm. There's just there's some recovery there, but it looks like we've got pretty stout resistance near $20 on everything in the August and beyond contracts. So it'll be interesting to see if the market can muster some strength. I think there's been enough pain, let's call it, in the dairy industry to start looking at, these beef prices and what you can get for heifers or cows that you don't want to keep. And I think I'm hearing, at least through my tentacles, that we're seeing that kind of business pick up.
Bryan, great thoughts as always. I'll let you go. Before we do, though, real quick, I know folks want to reach out to you for advice there at Total Farm Marketing. What's the best way to get a hold of you?
I would suggest a phone call first, 800-334-9779. So we'll start with that. And then I'd go to email, Bryan with a Y, at totalfarmmarketing.com. And then our website, totalfarmmarketing.com. Take a look. Lots of resources there. Always happy to provide service. Best though through a conversation.
Well, we thank you for the conversation. As always, Bryan Doherty with Total Farm Marketing. Have a great weekend, sir. We'll talk to you next week.
Okay. Thank you very much.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.